And now, the moment you've been waiting for all week, Courtney Smith's weekly video newsletter, TradeSmith.
Indeed, this is what you've been waiting for all week long. Let's take a look right here at this super tricky chart. Let me break it down for you because it's telling a big story, which I think is going to become headlines a year from now, but I'm giving you a sneak preview right now. What the story is reflation, looking for higher inflation in the next year. Now, the leading indicators of inflation are raw materials. Let's take a look here. The most important index for raw materials is the CRB index. That's the Gold Mountain chart. Now, this chart goes all the way back to 2007, so you can see the big deflation that occurred from 2010 all the way to the beginning of 2016. But notice how we have not made lower CRB prices in a year and a half, more than a year and a half. Now, I believe that this is going to cause inflation to come back. We've had massive monetary easing for 7 or 8 years, and that's going to start to feed into the economy. And that is then going to drive a number of things. Here we also see a red line. That red line is the Canadian dollar. The blue line, the Canadian Stock Exchange. The blue line is the Brazilian Stock Exchange, both of those divided by the S&P. In other words, the relative strength. And you can see that as commodity prices went down, the two commodity-oriented stock markets were in major bear markets. But now, with commodities coming back, we're seeing commodity positive plays coming back. Canadian dollar, Canadian stocks, Brazilian real, Brazilian stocks. Anything commodity related is going to be a big theme and a place that we're going to want to be in the coming year. So you're going to see me talk more and more about this as time goes on. It's not in the headlines now. That's why you subscribe, or that's why you listen to TradeSmith to see tomorrow's newspaper today. Hey everybody, great to be here. Let's just rock and roll here, shall we? You know where you're at. You love being here. You're waiting for it all week long. And of course, the disclaimer, that's the main reason you come and watch TradeSmith. Now let's take a look at the S&P 500, looking pretty darn good. Making new highs, purple predictor in good shape. Look at the volume in the lower right-hand corner that occurred on Friday. Unbelievable, high, unusual volume. The price didn't do a lot, but it did close on the highs. So right now, I'm taking that as a bullish signal. Dow Jones, I'm showing you this version to show you the purple predictor. Look at how it's caught up. It was a drag on industrials for many months. Now it's starting to supercharge the industrials. And also heavy volume. Now the NASDAQ, as you can see, the purple predictor, it's fine. It's fine. Also heavy volume. All this is pretty good. Now, let me go over here. Oh, by the way, that was the Qs. This is the ETF that mimics the NASDAQ, and the purple predictor sucks. Okay, seasonality, I took off the bearish signal. I'm now counting it as neutral. But if we break above that 144 high we made in late July, I got to turn it back to bullish. Why? Because we're starting to get into the seasonally bullish period of the year. And when we start to make a new high, then that means that we have to start getting back to being super aggressive in the market and double up our positions. Look at that purple predictor leading the IWM higher. It looks to me, we probably don't break through that high first time up there. We sniff it out. But I'd say sometime in the next 2-3 weeks, we should be making new highs here. And that's going to be able to enable us to get back on the super bullish side and get more aggressive. I'm looking forward to that. I like taking those big positions. Seasonality, well, we're in the seasonally bullish period. With only one exception, all of our scenarios are now bullish. Yield curve, bullish. Asset allocation popped up, bullish. Stock market risk indicator, the same as it was basically last week. So no change there at all. Global shares made new highs here, but the excitement is in the U.S. market right now, or actually it's in the emerging markets. As I said at the outset of this broadcast, we really should be in Canada and Brazil. But Europe's doing fine. Emerging markets, though, as I say, that's where the action's been. I've only been pounding the table for months. Look at that. New highs. And you heard it here first. This one trade alone is paying for your subscription. Bonds took a dive, though. Purple Predictor, however, perked up late in the week. And so I can't get bearish here yet. Can't get bearish. Bond key factors. Look at the blue line. The blue line are 10-year yields in Germany. They hooked back up. That's what really caused the bond market to hook up here. The other factors are not having a big impact, but they are suggesting higher interest rates. Now, the dollar, in spite of the higher interest rates, we did see a rally in the dollar, but it was pretty weak. Now, I have been saying now for 2 weeks, I think, that I'm looking for some type of a bottom here, but I'm not going to trade it from the long side at all. We've got to at least break that big red downtrend line and before we even think of switching out of the bear side. Gold took a dive, but closed the week a little bit stronger. Still, I think this is just a normal correction in a bull market. All of our 2 out of 3 of our indicators are bullish, but look at the one down at the bottom. That's the yen. It took a dive. That's not bullish for gold, and that helped drag the gold market down along with the higher interest rates as well. Oil, I'm starting to get a little bit more bullish, but still don't see this breaking out of the range that we've been in the last year. So I'm really just not that interested. Hey, freebies, love having you. You know what to do. I'm not going to give you the pitch. You know exactly what you're supposed to do. It's just embarrassing that you haven't done it. Also, we've got another Stock Success School coming up in just a week. We sold out the last one, so we booked another one right after it. So please go to that website up at the top. Is a live seminar, a tremendous amount of incredible information. Please go there, check it out. I know you're going to love it, but you got to type in that website up at the top exactly the way it is. All right, freebies, we'll check you out next week. Fully paid up members, hang in there. Oh my God, did we buy those stocks at the perfect time or what? In the year 2000, I had been writing the top performing stock market newsletter for 5 years, according to the Holbert Financial Digest. I had the top ranked mutual fund in the United States. I had the top ranked global macro hedge fund in the world. And I quit. I shut it all down. I shut down the hedge fund, the mutual fund, and I started canceling the stock picking newsletter. We had up to 30,000 subscribers to that newsletter, but I shut it down. I was burned out. I didn't want to do it anymore. But now I'm charged up and ready to go and want to bring you that same incredible performance again now. Check out all the information down below. I think you're going to really enjoy this newsletter. I think it's going to be very profitable for you as well. It costs a peanut. It's less than a Starbucks coffee a day. It's like $1.50 a day. Come on. You know I'm going to take that same track record. I'm pumped up. I'm ready to go. I'm going to bring back all that incredible track record, and I'm going to do it all for you. Just click on the button down below, read all the information below, but most importantly, click on that button. Thanks very much. See you in the next newsletter.